Hey, hello friends. Welcome back to the Blockchain Report. Well, let me get this out of the way. Welcome back to the Blockchain Report. We discuss all things blockchain technology, digital assets, DeFi, NFTs, and much more. Today we'll be going over some news, updates, check out the market. We had a nice little pump from Bitcoin about an hour ago, a little over an hour ago. But here's the total market cap, just under 900 billion, and 24-hour volume, 43 billion, and Bitcoin ETH dominance 37.17. Gas 20 Gwei, you know the Gwei. Bitcoin coming in at 17,241. We'll go over to the charts, make it look a little better. Close this out. Sorry, that's I literally got in. It was so funny. I was thinking about what one of these other traders said this morning, and I literally got in like right here. Forget it, it's like 102 and some like 102.3 or something like that, or 0.6, right at this point of control. And 5 minutes later, man, it just freaking Bitcoin went running. Yeah, we got a nice little pop. We're expecting some upside, whether or not we keep getting a pump. I mean, we got a nice volume gap right here. I mean, holy crap. You see this low volume right here? This is high volume. This line is called the point of control. That's where the most volume is being traded. And up here, that's the next point of control up here. It's like 19,190. So this, I mean, we could see if this clears, 17.2, 17.3. I'd say 17.3. We can get up here and hold this and bounce. Shit, we got 18K, 18 and a half might be a little tough, but that would be the next zone I look at. Yeah, we got the rate hike news right here. Well, it should be actually right here. So we still got another week. Yeah, next week. Rate hike news, so we'll see. I think the dollar DXY has been pretty weak, and CPI data is tomorrow. We'll take a look at some of this news. Yeah, we could drop down to 102 if we break this. Yeah, we'll talk about this a little bit. Bitcoin takes liquidity near 17K as US dollar shows weakness pre-CPI. Bitcoin price action targets 17K amid gently increased volatility with a week to go until US inflation data. So macro cues lacking, analysts eyed to potential breakdown US dollar strength as the next volatility catalyst for crypto and risk assets. The US dollar, or DXY, look set to challenge multi-day support, wicking below 105 multiple times on the day. Dixie's first time under the 100-day moving average since June of 21. That's pretty wild. Trader and analyst Pierre added that both DXY and S&P 500 can nonetheless trade sideways until consumer price index print for November comes in on December 13th. Oh, it is the 13th. Okay. Well, I'm going to go ahead and move this back to the 13th. I'll go ahead and move this back to the 13th. So Dixie flipping its resistance so far, while S&P sitting at D1 uptrend. That's deviation 1. There's a certain, you see there's like certain standard deviations that a price will move on a chart. So if you take the S&P, I don't remember how they figure this out. There's certain standard of deviations where they take the price and how much it's expected to move. Let's say this is the first standard deviation, or let's say 4,000 right here is the first standard deviation. So you would have on the downside the equal distance from current price to 400 or to 4,000. You take that and go down, and that's standard deviation down. So it's the equal distance in price going long or going short from the current price. So let's say this is one standard deviation, and then here's another, and then here's another, and then here's another. And this also plays into effect with how people trade or institutions trade, because they can, if the market's moving one way and it goes 2 or even 3 standard deviations, once it gets past 3 standard deviations, you know that it's going to start bouncing back up or dropping back down if it goes up and then comes back down. But those are generally this kind of guide for institutions and stuff to trade. It's kind of like a range. You know, you want to keep these ranges healthy and don't let them go too crazy on the standard deviations. And sometimes they hit, but yeah, it's very interesting, very interesting. But I think we can see some more upside. I mean, let's check the daily on the Bitcoin. I mean, you got almost not quite. Oh, maybe a bearish engulfing candle. God, if this bottom wick isn't just a little bit, it's almost exactly. So what's the open on here? Okay, the open on here is 1788. The open on here is 16. So this candle is technically an engulfing candle, which consumes the body of the one previous to it. This is very bullish. If we can close the day, we have 3.5 hours. We can close the day. That's beautiful for another move up. I mean, holy crap. Yeah, look at this on the daily. Look at the volume. You got a huge move, almost a $2,000 move right here. So yeah, keep an eye on those longs. Trail your stops if you can, and yeah, but don't be afraid to switch positions if it starts going back down the other way. But always, keep your stops up. Actually, I might move mine up a little bit, doing it live. Yeah. I'm actually going to take some profit on this because that is at the top of this range right here. Dope. Nice little. All right. So on to the next bit of news, some SBF, FTX. So Senate committee to subpoena FTX's Sam Bankman-Fried if he does not testify voluntarily. So he's being requested to make an appearance. And if he fails to appear, then he will be subpoenaed. So Senators Sherrod Brown and Pat Toomey, respectively the chair and ranking member of the committee, wrote on a public letter to Sam Bankman-Fried, who resigned from the exchange the same day it filed for bankruptcy protection last month. The committee is holding a hearing Wednesday, December 14th, a day after the House Financial Services Committee holds its own hearing on the exchange. FTX's collapse has caused real financial harm to consumers, and effects have spilled over into other parts of crypto industry. The American people need answers about SBF's misconduct at FTX. The lawmaker said in a prepared statement. The committee has requested that he testify at our upcoming hearing on FTX's collapse and will consider further action if he does not comply. And this is really silly, man. If you went totally against the law, whether or not he was aware of what was going on, it's still his responsibility and it's still his duty as a CEO and responsibility as a CEO to take ownership of that. So normally witnesses appear voluntarily, the lawmaker said in the letter. If Bankman-Fried does not confirm his participation by Thursday, I am prepared, along with Ranking Member Pat Toomey, to issue a subpoena to compel your testimony. The letter signed by Brown. House Financial Services Committee Chair Maxine Waters has also invited Bankman-Fried to testify, saying in a tweet Wednesday that she may also seek to subpoena him if he does not appear voluntarily. I don't know why they give him the option to come voluntarily, because this is a crime. This is 100% a crime. And to just allow him to walk free is crazy. Is crazy. So we'll see what happens with that. I'm tired of hearing about all this shit, but we got to keep pushing it. We can't just let it fizzle out and pop. I forget who said this the other day, but if there's a big change in tokenomics, it could kill a project. Or if tokenomics are changed later on, it could end up killing a project. So I don't think that the community is very on board with this. But we'll see. Decentralized finance protocol SushiSwap's facing a significant deficit in its treasury that threatens its long-term operational viability, according to a governance proposal from project developers. After reviewing expenditures, the project's annual runway requirement was reduced from $9 million to $5 million, but the Treasury still provides for only about 18 months of runway. So a year and a half. To address the deficit, the lead developer, Jared Gary, proposed setting CamPi, a fee diversion protocol, to 100% of fees diverted to the Treasury multisig for 1 year, or until new token distribution and reward schemes are implemented. The proposal is a temporary solution to a long-term problem, and new tokenomics will take time to implement. Community members showed mixed reactions of the proposal. Some said that depriving users of the fees they are entitled to felt like a breach of the project's primary objections, while others criticized the sensationalized tone used by developers to highlight the urgency of the situation. Developers, however, maintain that the proposal is to ensure the long-term operations of SushiSwap. Bear market environments present multiple challenges for projects and teams, and recently we've seen many notable projects lay off substantial personnel or go bankrupt. It makes little sense for Sushi to follow a similar path when it has an opportunity to capture its singular significant source of revenue and direct it back to the Treasury for the benefit of all. Sushi team had increased its funding by securing several multi-million-dollar partnership deals, Gray said, cautioning that relying on such business development deals is only part of a successful business model to secure Sushi's future. I could see something that they maybe... The only thing is, if you can back out of this change once you build adequate runway or find other ways of bringing in capital. But if you have something that's no, because BlockFi and Celsius and all them, Voyager, they were offering 15% or so, upwards of 15% on Bitcoin per year. And then a bunch of these lending protocols took that back. They stopped doing it, or they offer 1 or 2%. I could see something like that where they maybe not take 100% of the fees, but cut it back substantially until they can get their feet back under them It's a very tricky situation. I feel for the people, but then again, if you don't help the protocol out or the project out, it's going to be gone and you're not going to have any of this anyways. So it would suck to bite the bullet for a year, but if the project's gone in a year and you're not going to have any money long term anyway, so it's kind of a catch-22. But interesting. I wouldn't hold sushi. What is sushi at? Sushi USDT. Did it take a bite on that? Yeah, it doesn't look too great. I mean, wow. Like a lot of projects. So, yeah, just keep an eye on sushi. If you're invested in it, I'd look somewhere else. Warner Music, Polygon, and Legend partnered to launch Web3 music platform. The platform Legend Music is set to officially launch in January 23 and will also include dance record label Spinnin' Records. E-commerce and interactive platform builder LG&D Legend has announced a multi-year partnership with blockchain network developer Polygon and global entertainment company Warner Music Group to create a Web3 music platform called Legend Music. Legend Music, scheduled to launch in January 23 next month, is designed to be a music and collectibles platform that supports digital collectibles from any blockchain in a proprietary player, thereby making it possible for users to play their digital collectibles on the go. The partnership will allow select Warner Music Group artists to launch digital collectibles on both the app and desktop platforms. Creators will also be able to interact with their fan base via special content and curated experiences. The platform will be built on Polygon and offer lower gas fees and faster transactions. And Legend Music plans to offer a variety of features, making it possible for music collectors to participate in a decentralized ecosystem based on full ownership of digital assets. According to the company, users of the platform will also be able to buy and fully own music tokens and easily get started with digital collectibles by building a collection. That's so cool. And it will be easy to use even for users who are unfamiliar with cryptocurrencies or digital collectibles. I'm not sure what Legend Music is, but Polygon has been killing it. Polygon has been killing it with the partnerships. So what is Legend? Let's check it out. Aha. Which one is it? Is it legend.art? Okay. Looks like it is. Yep. So legend.art is the actual website. Interesting. Interesting. Okay. If you're interested in that, check out Legend. But that's cool. Keep an eye out. If you're an artist, this will be good. We need a lot more Web3 music platforms. Help get the artists more ownership of their... Sorry, there's something on this camera. More ownership and revenue from their music. Strange, huh? How that works. Some cool metaverse news. Decentraland launches virtual property renting for landowners. Metaverse platform announced that users who own land within Decentraland can officially rent out the rights to the space through the digital marketplace. And this is what NFTs are going to be have big utility for, is you can, or digital land, you can rent out your property, earn passive income. And yeah, it's amazing. It's amazing how something so silly or that we think is minuscule, like, oh, metaverse, what is that? It's just a virtual place so you go online, which we have a lot of now. There's been metaverses technically, but this is a new level to where not only do you own land in that virtual space, but you can rent it out to other people who might not be able to afford. Like, you go out here in the real life, you can't go just buy a building and live in it, or buy a plot of land and stuff like that. I mean, you got to have capital, you got to have good credit, all this red tape. And so what do? You go rent. You go rent an apartment, rent a house if you can't buy one, rent office space. What happens in virtual? Same thing. Now the Oculus and all those 3D headsets and virtual headsets, not 3D, virtual reality headsets, and games that you'll be able to go in these metaverses and set up a business inside. You can rent, the property, but the people who own the land are getting, it's virtual landowners. So now that they're rolling this out, I'm curious to see what people's revenue will be like in the metaverse. Interesting. Pretty cool. Now, for the last couple, we'll be covering some CBDC news. Now, I listened to BitBoy Crypto this morning during the live stream, and he had on this gentleman from Unbanked. And he made a good point with CBDCs. The government's already getting your digital information from banks and everything, credit card companies. So they know it's essentially all digital. I mean, it is all digital now. They just don't have as much control as they would have with CBDCs because they would own everything. You wouldn't have any cash. I mean, I don't know if... I believe that they would just remove cash completely and go all digital. In that case, you would... it would really suck. But if they still have some cash, CBDCs won't be too bad because you can take that money out and use cash to do whatever. But yeah, just the stuff that I'm worried about, stuff like this with Iran freezing bank accounts of women who refuse to wear hijabs. And this essentially reinforces the need for decentralized currencies to exist in tandem with cash and CBDCs. Because this doesn't just happen in Iran. This has happened in Canada. This happened in America for people who didn't go with the narrative or go with certain see something 19 mandates. And if you were caught not going against the mandates or being critical of them in certain countries and states, they would freeze your bank accounts and lock you out, especially in China with their social credit score. That's what CBDCs will be the worst thing for us, is if they incorporate a social credit score. But I just kind of want to touch on this. I don't want to dive into this too much, but the next one really is alarming because it can happen here. And think about this: if the U.S. bans ATM cash withdrawals over $225 a week, or even let's say $1,000 a week, how can you, or should even say $500 a week, if they want to get rid of cash and push you towards the CBDC, they will limit your withdrawals. You'll have to start taking out and just stacking just cash, cold hard cash. And that's if the government doesn't come after us like they did, back in the 30s, I think, or so, with gold. 20s, 30s, or 40s, I don't remember. I don't study it enough. But they were requiring people to hand over their gold and to be taken off the gold standard. But now they're going to be taking away cash. And this can happen in America. So I'm just giving you guys a warning. If CBDCs may not all be bad, there can be ways that they can be done. There are ways it can be done well and helpful and cost effective. And in the end, I just think it's more oversight, more overreach by the government and the Fed. And they can set alerts, whatever you have go off. If you spend over $600, then they'll flag that and it'll go into their system. And when tax time comes, they can be like, hey, where did this $600 go? What's it for? Where'd you get it? What'd you buy with it? They want to know all that. So not to be a little dark cloud over this wonderful episode, but gonna check back in the markets and know we just kind of went over them, but gonna get a little pullback, maybe. Yeah, get a little pullback and to the moon. But that being said, take a line from my man Frankie Candles. Oh, if you haven't checked us out on YouTube or Twitter, hey, jump. Go on here. Oh, look, I'm live. Yeah. We got our my videos. I don't want to go to the studio. Got some questions. Let's go to the channel 120. Thanks, y'all. Well, we got the blockchain ecosystem beginner's guide. Going over Ethereum right now. I'm going to do probably Cardano next. I really like the ecosystem and what they have to offer. So check us out, the Blockchain Report, on YouTube, on Twitter, the BCR142, since someone got the Blockchain Report. And that being said, appreciate y'all so much. Hope y'all have a wonderful day, wonderful night, wonderful morning, wherever you're from. Have a good one. And we'll catch you on the next one. Peace. And keep your stops in the green.